Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, we finally got the all-time high breakout from the bulls that we've pretty much been predicting on the channel now for about a week and a half. All the stars were pretty much aligned for this one. We had gorgeous weekly uptrends coming into a little bit of consolidation into support, and now we get the follow-through rally. This was also coupled with a very drastic and quick decrease in your yields in the past 5 days. And we've been commenting over the past 5 days that such a rapid decrease in yields, such as the ones we had back in the month of May, usually do lead to significant rallies to the upside, right? Another leg up, in other words. So I do believe this next leg up is started, and we had very nice broad market performance. It really just wasn't big tech leading the way today. It was a question of the everything rally. So we also had a little bit of news come out in the morning, guys. We got an ISM services report. So we're going to take a very brief look to start off the video into that ISM services data report to gauge whether or not services inflation and services prices are coming down. Thereafter, we're going to tackle one earnings report that I have prepared for you guys, and that's going to be LULU Lemon. They reported after the close today and are up roughly 10% in the after hours. So very good performance from the stock in the after hours, but not so much great performance by the company. So that's what we're going to take a look at. And after that, to close it up, we're going to do our major technical analysis rundown in terms of our big tech names and our major market indexes. No portfolio report, no portfolio update from me today, just because there was no new trade. So I'll probably do another update tomorrow if I close some trades or on the Friday session. So we're going to try to keep this video as short as possible. So without further ado, guys, let's jump right into it. So SPY up a very healthy 1.19%, eclipsing the all-time highs. QQQ up a very healthy as well, 2%. Been a long time since we've seen a 2% day in the QQQs, and it's just so fitting that that is the candle that breaks through the all-time high. It just goes to show you that there was a lot of momentum in the markets today, a lot of pent-up buying in the last 2 weeks of trading as well. Take a look at the heat map here, guys. You will see that, yes, technology did lead the rally, but the markets were very broad. Pretty much it's a case of an everything rally. Only a few consumer defensive stocks were left behind, but these have been performing very well over the last 2 weeks of consolidation, so they took a little bit of a breather. Our big tech names really took over today. Even software getting some love after being pretty much crushed last week after Salesforce earnings, and the outperformance just continues in our semiconductor market. Now, the two largest leaders in terms of market weight, NVIDIA and AVGO, up substantially today, 5 and 6% respectively, and that contributed to bringing up your semiconductors index as a whole up almost 5% in 1 day. Massive outperformance. Now take a look at the 1 day relative here, guys. You'll see that finally we get a fairly broad market day of performance. Almost everything in the green, just consumer defensives, real estate, and utilities left a little bit behind. And this is a curious one, guys. Usually real estate and utilities have an inverse correlation with yields. So inverse correlation with yields. So usually when these are down, you would expect yields to be up and vice versa. Today we had another down day of yields, but our interest rate sensitive sectors still a little bit down on the day. So very curious there. Now, in terms of the 1 week, we've pretty much reversed all the losses of the prior week. Everything pretty much in the green except for basic materials and energy. Energy obviously being led down by our oil prices, which have just pretty much been crushed over the last couple of days due to a renewed OPEC decision surrounding the amount of supply that they're going to put out. So this oil chart is going to be another contributor to bringing inflation down, but it's not the largest component. The largest component of inflation is still services, more specifically the housing sector that the Fed is looking at. So before we get into more technical analysis, guys, let's take a brief look at our ISM services report. That gives us an indication as to how our services inflation that we just talked about is doing. So it came out first thing this morning pretty much. We came in with a read of 53.8 versus the 50.8 expected. Now, anything above 50 shows that the economy is expanding. Anything below 50 is a contracting economy, as we saw with the manufacturing index showing a little bit of contraction here on the Monday. Well, services is actually expanding. But is that a bad thing for inflation? No, not at all, as a matter of fact. When we take a look at the details of this most recent services report, you will see that the business sector is expanding very nicely. Look at this. Business activity, new orders, employment, supplier deliveries, everything to the upside, right? New export orders as well, and inventory sentiment down a little bit. However, look at this, guys. inventories and prices are actually down. This is a very good thing, guys. So what can we draw as a conclusion from this event potentially? Well, it's just the fact that right now consumers are really pinched for money, right? Consumer discretionary income is down. And with service prices that have been so elevated over the past 2 years, it's led a lot of consumers to taper back on their services. So what we're seeing now is a little bit of healthy competition. What's happening now is after service companies have kept their fees so high for the last 2 years with inflation, they can't do it anymore because they're losing customers and demand is faltering. So now we have a little bit of free market equilibrium coming into play, right? When you have a little bit of reduced demand, what you have to do to stimulate demand is bring down your prices. So now we're seeing companies in the service sector finally bringing down prices. And that is what's contributing a little bit to stimulating some more service activity. So all in all, a good thing, guys. I do believe that the services inflation trend should continue to be on the downside, and we should have some further reductions in services prices over the next coming months. So all in all, not too bad of a report here, guys. A fairly minor report for the markets. The bigger ones is really going to be on the Friday session when we really get some good data from non-farm payrolls and your unemployment rate. That's going to be the biggest day this week. In terms of next week, though, we have a very big week, CPI and a Federal Reserve meeting next week. So that is going to be the very big one. This week should be a fairly muted week, to say the least. Now, in terms of our earnings report, let's get into Lululemon right away. So Lululemon, what happened to this stock? Well, you guys obviously know that Lululemon has had a heck of a decline here since pretty much the start of the year. Well, actually, after December, when they got included into the S&P 500 pretty much, right? They're down about 43%. Very, very steep decline on Lululemon in that aspect right there, coming into a large area of technical support. However, this is a company kind of like Starbucks and Nike, right? It represents the consumer discretionary sector as a whole. And as a whole, people haven't had that much money, and Lululemon is really facing increased competition from brands that are launching off of TikTok and off of social media that do not have the amount of overhead expenses that Lululemon has. Lululemon has approximately 700 plus stores worldwide, and those take a lot of money to maintain. And unfortunately for them, they have a lot of smaller brands that are currently using viral marketing to eat their lunch. It is pretty much exactly what e.l.f. Beauty is doing to disrupt the entire cosmetics industry. Well, Lululemon is being disrupted by those smaller influencer brands, as you can call them, as of lately. And they've been struggling with that problem now for about the past 2 years, but now it's really starting to hit them in the margins where it hurts. So in terms of the company, guys, the company actually did good in the after hours, up about almost 10%, but the report wasn't really good. They really only jumped because they had an increase in profit, and they did promise another $1 billion in share buybacks. But the quarter was not the best. They did beat on EPS here by about 5.77%, and they did beat on revenue ever so slightly by about 0.5%. The guidance was not all that great, however, guys. Let's take a quick look into the snapshot before we're going to get into the article here. Just want to show you guys in terms of the financials of the company, right? Financials of the company, not too bad at all. They have a lot more cash than they do have debt, and they are starting to build a little bit of a free cash flow pile. The problem with Lululemon right now, guys, is it's running out of growth. It is not the same company that was growing from back here, 2016, 2017, when we were seeing leaps and bounds in EPS. Yes, right now the EPS is growing, but really slowed, guys, almost 10-11% per year only. That is very slow. And in terms of revenue here, guys, you can see revenue also expanding about 10% per year. So yes, they're expanding double digits, guys, but the company's valuation, even at these crushed levels, is a little bit tricky. And we'll get into that in the later portion when we cover in terms of their valuation here. But just to say, guys, the growth is just not there anymore. And the reason that I bring up free cash flow is that when a company is struggling with growth, they have to have high amounts of free cash flow so that they can use the free cash flow either to pay the dividends to investors or do share buybacks, which really helps backstopping some of the negative price action on the stock. So hopefully they'll be able to, in spite of losing growth, build a bit more free cash flow and start doing buybacks a bit more aggressively. Now, in terms of Lululemon article, take a look at this, guys. Lululemon shares pop 10% despite lackluster earnings and guidance. Yes, it's true. They issued very weak second quarter guidance as it contends with a slowdown in the Americas. Now, let's take a look, guys, right? The growth in the Americas, its largest market, appears to be stalling after the retailer on Wednesday reported flat comparable sales in the region and weak guidance for the current quarter. That is literally what every single consumer discretionary stock has said in the most recent quarterly earnings, so no surprise there. The athletic apparel retailer handily beat Wall Street's earnings estimates, but only narrowly topped revenue expectations. Lululemon's full-year fiscal guidance suggests that the company is betting conditions will improve in the back half of the year. Now, let's take a brief look at some of the numbers here, guys, in terms of the beats and the misses, right? So they did beat the revenue and the guidance in terms of the revenue that we really went over about 2 minutes ago on the channel, right? Slightly beat in terms of net gross margin as well, and they did beat on the EPS. Where the company faltered is in the guidance, right? So they reiterated their annual revenue guide, which met estimates. They did not raise. They raised their annual EPS number to about $14.10, but that is down from last quarter here, guys. Last quarter, analysts were expecting about $14.23 for the full year, and now it's been revised to about $14.10. This was 1 quarter ago, so now they lifted it up a little bit, but still not what it was last quarter. Now, here's the miss. The Q2 revenue guide missed by 1.7%, and the Q2 EPS guide missed by about 10 cents on the estimate here. So not very good. You can also see here, guys, no new stores have been opened in the quarter, still standing about 711 stores worldwide. They did say that they were going to pause the expansion of new stores while the macro climate is a little bit uncertain. In terms of gross margins, not really much has changed. Q4 is really their best quarter. That's why you see some outlying numbers. But if we were to compare it to Q1 of 2023, gross profit margin is roughly the same, and EBITDA as well is roughly the same here. Net income to the bottom line number is roughly in line with what it was Q1 of 2023. So really no new growth in terms of net margin. So really all the focus, guys, is on the consumer slowing down its spending. Now, the company also announced they would add $1 billion to its stock buyback program. That is good. So the reason that they were up 10% in the after hours is these two lines right here. $1 billion in extra stock buyback program, and the reported net income was better than expected. So net income was $321 million as compared to the $290 million expected. So nice little beat there by about 10% on net income. That was pretty much the reason for the stock's rise in the after hours. The beat on net income and the $1 billion in stock went to kind of offset the negativity about Q2 guidance. Now, here's what the CEO had to say about this. He touted the strong momentum the company is seeing in its international markets and hinted that it needs to do more work in the Americas to grow in the region again. Last quarter, McDonald's said that the company was seeing consumer dynamics change in the Americas, but also noted Lululemon fumbled by not having the right sizes and colors in its stores, which hit sales. During a call with analysts on Wednesday, McDonald's said those issues continued during the fiscal first quarter. So guys, I mean, I have a hard time believing this, right? Lululemon is such a very well-established brand. If they're saying that they're missing sales targets because they didn't have the right sizes and colors in its stores, guys, that's a little bit of a stretch, right? Obviously, consumers can also obviously order these things online, which kind of removes the need to have the right sizes and colors in their stores. I think this is a little bit of a window dressing by the CEO. The real cause of concern here that he doesn't want to talk about is increased competition from various brands on TikTok and Instagram, and also consumer discretionary spending is down. He did not address these on the call. Now, Lululemon is still growing in the Americas, but at a much slower pace than last year. During the first quarter of this year, sales in the Americas increased only 3% versus a 17% jump in the year ago period. Comparable sales were also flat from last year, so definitely stagnating right now, right? Now, Lululemon issued weak guidance for the current quarter, as we just went over prior, and pretty much the last thing that I wanted to bring is denim is having a major moment with consumers, and investors have been concerned that shoppers could be swapping athleisure for jeans, which could hit Lululemon's top line. Well, that's why we go on Google Trends, guys, to see if the fashion trends have changed. You guys know the deal. Lululemon and athleisure as a whole really took off here 18, 19, and especially 2020 with the pandemic and with work from home. Everybody was pretty much rocking the athleisure apparel, right? Men and women alike. Now, let's take a look. Is denim really replacing the athleisure trend from right now? Well, here is a 10-year Google Trends chart of leggings as a whole, right? So leggings, you can see that although we're not at the highs or even the higher lows that we were back in 2021, I wouldn't really see the trend is dead, right? The trend is coming down a little bit. Why you have little spikes here, guys? Just very simple, right? Leggings are pretty much worn in the winter. So this term is going to be obviously not that hot in the summers, right? You can see all these troughs right here are summers and all the peaks are pretty much winter periods. So that is the reason why you see a graph like this. Now we can search for the term athleisure as a whole, and we can see that, however, pretty much since 2016 has been continuously expanding, and we are on a worldwide filter right now. So far, the fashion trend doesn't seem to be dwindling down, but it is Lululemon as a legacy brand is facing increased competition, and the company, in all honesty, guys, I like Lululemon as a company, but you can't argue that this company has a moat. All of its products are very easily replicable, right? You can make leggings like no problem at all. It's not as if they have tremendous, tremendous IP, right? Tremendous intellectual property behind their designs. So it's not a brand with a very high moat, and that's why some competition is really starting to erode them right now. In terms of the valuation here, guys, well, they have somewhat low debt, like we saw before, somewhat low free cash flow. I mean, the cash flow is there, but it's not a massive amount of free cash flow, the likes of like big tech generate sometimes, right? And then we do have increased competition. Now, where does that put us in terms of valuation at the $330 mark in the after hours? Well, they have a 2024 APS of 14.13. Their forward 2024 PE ratio at 339 using this forward EPS is about a 24. At a first glance, that doesn't seem like a high number, but which is why we divide it by the growth. And you can see when we divide 24 by their EPS growth over the next 3-4 years, their PEG ratio is about a 2.08. Yes, still a little bit expensive, guys. Anything between 1 and 2 is okay. Under 1 is a very good deal. Over 2 is a little bit of expensive deal, right? So now, even though the stock is 40% off the all-time highs, coming into an area of monthly support, it is still expensive, guys, and they do have increased competition. So it's very tough for me to buy this stock and hold it as a part of a longer form portfolio. I do believe that there are better retail names out there. That's why personally, I'm invested, obviously not financial advice, but my two only retail plays that I have in my portfolio right now are Louis Vuitton and Elf Beauty. Louis Vuitton, because it's almost impossible to disrupt the brand. They're a conglomerate. They have about 86 different brands, luxury fashion brands. Nobody is going to disrupt them at this point in time. And number 2, Elf Beauty. Why do I choose Elf Beauty? Because they're disrupting legacy cosmetic brands with a very different and unique business model, more tailored to the era that we're in right now, the social media era. That is Elf Beauty's bread and butter, and they're executing flawlessly. So those are my two retailer picks. I do like Lululemon as a company, but more specifically, maybe only for a little bit of a swing trade, right? Trying to get this weekly uptrend back going. This trend, this stock will most likely recover a little bit, but it'll only recover as part of the larger consumer discretionary trade. So when this stock recovers, expect to see also gains in names like Starbucks, Nike, and companies of the sorts, right? So lagging a little bit behind here, not a long-term portfolio pick for me, but could be interesting for a little bit of a swing trade, especially bouncing out of the support range right here. So that's pretty much everything we had for Lululemon, guys. Now let's jump right into our indexes, and not much has changed. We've pretty much been predicting this move over the last week and a half of trading. So SPY really coming off nicely here. They were in a daily downtrend. We were monitoring the size of the bounce. Size of the bounce, as we were saying, guys, is about an 80% bounce, gives the bulls the best chance for the higher low and the pop, and now we have the pop. So nice new daily uptrend established. So as soon as this move is topped out, going to be looking for a higher low, anything pretty much above 525.12 right now. Just going to be looking for that daily higher low for further trend continuation. I'd like to see the bulls put in a little bit more space between us and these most recent all-time highs, that they can really come back, sit on them, use them as support, and go for the eventual rise. Now, in terms of the weekly is looking very good. 2 days of trading still left in the week, but if we close the week very green, guys, it's just going to be a weekly trend continuation pattern, right? So weekly, we had the weekly uptrend back here, and we were looking for the re-establishment of the trend. We were looking for either the V-shaped formation, which we got, or potentially the two-step recovery. Well, now we got the best of both worlds, guys. We got the V-shape, sit on all-time high as support, and now rally. So looking very good for another leg of continuation to the upside. Keep an eye on your round number increments. 550 on the SPY, next target in my opinion. Now moving into QQQ. QQQ also having a gorgeous day today, right? Clearly blasting through the all-time highs. So nice daily uptrend reversal. Same thing. The size of the bounce was fairly decent, about a 65% bounce. The bulls setting the daily higher low right away, and now daily higher high. So you do have your new daily uptrend. So as soon as this move is topped out here, guys, look for the hourly, right? The hourly on SPY and QQQ today, I will agree with you, are pretty much, you know, very, very overbought right now. So could we see a little bit of a retracement here in the next few days of session? Yes, but we're well above our all-time highs on the QQQs. You could maybe see something like this, little bit of a cool down here on your lower time frame RSIs, which would just be a perfect opportunity, guys, on the daily for a little bit of consolidation here and a move higher. So looking very, very good, guys. Daily uptrend, full control in the bulls right now, and the weekly uptrend as well. Full weekly uptrend recapture. QQQ, contrary to SPY, had lost the weekly uptrend, excuse me, and now we have officially gained it back. Lower high, higher high. Very nice work by the bulls. Moving on to XLF financials right now. Give me a very quick second. All right, so moving on to XLF financials, 0.29% to the upside. Financials not really close to breaking the all-time highs on their own, however, but are looking for that daily uptrend, right? So they did have this daily downtrend going. We have a nice 100% engulfing move, trying to set up for the daily higher low, using this 50 EMA as support right now and looking to launch. If the rest of the markets do well tomorrow, I do expect financials to be able to recover this daily uptrend as well and get us out of this red box of consolidation. This is your previous area of all-time high. If we do get the daily uptrend shift tomorrow here, guys, you know the drill. Just going to be looking for the weekly higher low and weekly trend continuation, targeting these all-time highs around 42.48. So not looking too bad. Still a few financials deals out there. Charles Schwab, buy the dip opportunity, was there, had talked about it pretty much in the last 2 days of trading. Very nice trade to be had there. And even a stock like Bank of America looking very, very good in terms of just a clear weekly uptrend. So any moves to the downside, guys, perfect opportunities to be buying the dips if you like trend trading on a fairly stable stock, right? So all in all, very nice performance by XLF. Now let's move into healthcare. All right, so talking about healthcare now, guys, 0.45% of the upside. Well, I mean, guys, the rally on healthcare has been substantial, right? Massive crush last week and taking it all back this week. This is the best case scenario. We talked about it, right? Size of the bounce right now, pretty much almost 80%. We don't even need to put the fibs on it, right? Put the fibs on it, you can pretty much see it with your eyes. 80% retracement, very, very nice. Looking to eventually, when this move tops out, set the daily higher lows and run for a bit further. Now we have created a lot of space, guys, above the two areas of congestion. Number one was this previous area of support, 144.70, and number two is your moving averages. So could be seeing a little bit of something like this. If we do consolidate tomorrow, try to set up for the daily higher low and maybe mount and close above, get that daily uptrend back going and really do a great job of resetting this into a weekly uptrend. We were in a weekly downtrend for a very long time. Bulls putting in a very juicy bounce, setting the weekly higher low, and now looking to expand on that trend. So everything looking picture perfect for healthcare. Great job of recovery. Still a few healthcare stocks, guys, that are left a little bit behind, even though they have rallied. AbbVie is one, still kind of significantly off the all-time highs. And I think Johnson & Johnson, if I'm not mistaken, yes, Johnson & Johnson, still one of your healthcare stocks that is at a very nice area of support and still a little bit crushed. So I'll be looking to see if I can maybe make some short put plays on this one around the lower 143 area, just as a little bit of a mean reversion trade since it's lagging behind the rest of its index. Now moving on to semiconductors. Semiconductors, I mean, wow, guys, 5% to the upside almost. Massive day for semiconductors, right? Daily uptrend, clear as day right now. Just moving on to the higher high, so looking very good. New daily uptrend, rejecting perfectly from our previous all-time highs and from the 12 EMA. That's why these two things are very, very important things. And I always point them out as much as I can, guys. The confluence between support levels and the moving averages, they usually act up very, very nicely, especially when you're in an already nicely established uptrend, right? So looking very, very good. As soon as the trend does top out, going to be looking for a daily higher low, anything above 240, just looking for that daily higher low for further trend continuation. Weekly breakout is absolutely gorgeous right now, guys. See, they lost the weekly trend and now not even bothering to set a weekly higher low and rise. This is just one single move. So as soon as we lose that, as soon as we start setting a little bit of a daily downtrend in semiconductors, that's when you can expect maybe some weekly consolidation, taking us perhaps back into the previous all-time highs, into about the 238 level. Still no signs of that yet. Bulls in absolute full control. Now moving on to IWM Russell. IWM Russell not looking too bad, 1.53% to the upside, still trapped in this wide range of consolidation for the past 2 weeks, right? So we're looking for a break either direction, right? Break of this level right here, 207.34 to the upside. This guy right here is going to be synonymous with a new daily uptrend, and then you will know that your weekly higher lows are set and the market is potentially looking to attack this 212 area of resistance. Very big prior support level, current resistance area for the bulls. So After 3 weekly candle formations like this, it really leads me to believe, guys, this is a weekly bull flag, especially with the fact that interest rates have been dropping quite substantially here. If they do continue their rapid decline, especially next week, if we get bullish CPI data and Jerome Powell is nice to us, I do expect yields to continue on their downtrend, and that is when maybe you might have this next leg up happen on the Russell, maybe as soon as next week or in the next 2 weeks, guys. All in all, looks nice, looks very, very good for a build up, the coiling up of the chart right now, building a lot of pressure right here, may just be ready to set the weekly uptrend and really smash this level and start taking back some of these most recent highs. Moving on to Dow Jones right now. Dow Jones kind of lagging behind the overall recovery, right? Still substantially away from the all-time high, but that's okay. It's trying to put in work, right? So the size of the bounce as of now, guys, is not the most adequate bounce, right? In terms of the bounce size, only looking about 38.2%. I would really need to see it come at least as high as about 39,000 or 39,300 at best, right? That would really give the bulls the best chance, creating enough space here to then reset into a daily uptrend and really put an end to this weekly consolidation as well. Look at this weekly consolidation, guys, right? They are trying for the weekly uptrend. The problem is the bears took back a lot of the move, right? So could we see something like this maybe where it takes a little bit more time to do? Yes, but I do believe the Dow Jones will not be left behind, guys. We're currently sitting on a very nice juicy area of support right now, and the Dow Jones will move in line with the rest of the markets. So if your SPY, QQQ, and the other names continue rallying, well, most of those names are part of the Dow Jones, and the Dow Jones should be able to recover just a little bit slower than its industry peers right now, right? Now let's move into crypto a little bit, because crypto is making some nice moves. Bitcoin, guys, almost at the all-time highs right now, looking very good. $71,000 on Bitcoin right now. Daily breakout is pretty much underway. So if we lose this, let's say we can't break above the all-time highs, well, the bulls do have a little bit of space below us, anything above 67,000 pretty much, just looking for the daily higher low to maybe make a second attempt at the all-time highs, but looking very good, guys, especially on the weekly, right? Big weekly downtrend on Bitcoin, engulfing move above our big line of support right now. That was previous all-time high resistance. We're using it as an area of defense. The 12 EMA is catching up right now. Could be looking for the weekly trend breakout pattern. And the monthlies always look gorgeous. No secret there, right? Just 3 months of consolidation at the top of the move, which is very, very bullish. Monthly bull flag, dare I say, on to bigger and better things. I would not be surprised, especially considering the drop in yields and especially the drop in the US dollar too. That could very nicely impact Bitcoin. Bitcoin is a risk on trade. So as financial conditions start to ease off a little bit, that's when I do believe that Bitcoin should have its next rally. We're targeting pretty much 100K on the channel here. We've said it so far in the past. I do believe, however, that this will be an extended rally, right? Don't expect pretty much very, very quick gains like this pretty much, but we could just have a little bit of a slower rally into the 100K mark rather than pretty much back-to-back 20% candles on Bitcoin, right? The added liquidity from the ETFs takes away some of that volatility. Now, moving into Ethereum. Ethereum looking very, very bullish here, guys. Very nice consolidation at the top after the ETF approval news. Still sideways consolidation, getting very, very tight here, guys. It's where it's ready to explode pretty much. This move will be a very big move to the upside, and I do have a bullish lean on it. We're going to be pretty much targeting your prior area of resistance right here at around the $4,000 mark, looking very, very good. And then we're pretty much off to our all-time high resistance, which is right around $4,700. So looking very good, guys. Coiling up at the top, pretty much a bull flag, respecting the 12 EMA on the weekly as well. Sideways weekly consolidation, looking for the weekly higher low to get that weekly trend going once again. So Ethereum looking extremely solid. A bit tough for me to add at these positions, but all the positions that I've been building pretty much this entire time, I am holding. Now moving into our big tech names. So moving on to Apple. Apple just on an absolute tear here, guys, ever since the earnings. I mean, how much is Apple up pretty much since the day after earnings, right? Almost 16%. Heck of a rally from Apple without really giving back too much of any gains, really. So as soon as this move is topped out here, guys, we're getting a little overbought. We really tapped overbought conditions on the hourly today for the first time. On the 4-hour, we're not quite there yet. And on the daily as well, we are there, but it's not significant, right? So yes, we are tapping into overbought conditions, tapping into prior all-time high area of resistance. So that could be synonymous with a little bit of a rejection. If that rejection happens, anything above 180.84, just gonna be looking for a daily higher low for continuation of the daily uptrend. No red flags at all. And even on the weekly here, guys, Apple sometimes it just goes on these weekly moves and just doesn't give you any chance at a possible higher low for a potential entry, right? It just launches on these moves, and that's exactly what happened this time. No re-entry capacity at these lower levels, unfortunately for somebody like me. So as of right now, guys, as soon as Apple does get its first daily downtrend, that would most likely be with overall broad market consolidation, going to eventually be looking for the weekly higher low to eventually be reset into a weekly uptrend. They set it back here as well after about 6-7 weeks of rally. We really tapered off and dropped into the mid or low 180s. If we can get a little bit of the same drop off here, I would be extremely happy to buy the dips 185 and below on Apple. Now moving on to AMD. AMD looking very, very solid here today, guys. Finally, a nice green day on AMD, closing almost 4% to the upside. Still trapped in this range of consolidation, however, right? But if we go with in relation to the rest of the industry, right? The rest of the industry is very bullish. I would not be surprised if AMD is able to really break above this whole 172, 173 area of resistance and start challenging the higher 180s. That being said, they still have a lot of work to do, right? Still need to reset this into a daily uptrend and close above this level. It's a big feat for the bulls. They've tried a lot of times, just not able to get the job done. On the flip side, if ever we were to lose these lows right here and get sent into a daily downtrend, just remember, guys, the lower area right here, 155 down to 140. Very nice buying opportunity zone for AMD, in my opinion. They will just at that point be trying to set the weekly higher low for the weekly trend change. But as of now, you can see these weekly candle closes. Let me zoom in on it, right? Look at these tails, right? Look at the candle tails, how much we're rejecting from this area, right? Trying to set the weekly higher low to rise. They've been using this area as resistance, or support rather, sorry. So I'm not too sure if we are going to revisit these areas. I'll be ready if we do, but I really would not be surprised, guys, if we just launch from these higher low areas right now, because this area was a very highly congested area last time, the previous all-time highs, and did act as support here for 5 weeks in a row in the month of January and February. Now, moving on to Amazon. Amazon also looking very good today, up another 1%. So Amazon really trying to just find its weekly bottom right here, right? So this entire daily downtrend was pretty much weekly consolidation for your bulls. Gorgeous weekly uptrend, right? Just looking for a bit of weekly consolidation to continue the weekly uptrend. Now, in terms of the daily bulls are looking good. We've engulfed a lot of this most recent leg of selling right now, pretty much over 70% of the move. So now the bulls have the great chance of doing two things: either complete V-shape, sit on it, and then rise, or if we can't get it done, the bulls have created enough space to go down here, set the daily higher low, and get the daily uptrend back. Looking very, very good, guys. We're challenging the moving averages to the upside, and I do believe the bulls will be able to pull through. This lower 177, 175 area for Amazon is such a highly congested area pretty much ever since the month of February. That's why in the past couple of weeks, guys, I've been saying as we approach this area, be very, very on point about your entries, right? Anything below 180 should be a bid for most investors that are bullish on Amazon. And lucky to say that, well, not lucky, but thankful to say, guys, that once again, we were right. All of our bids that we've been making in the past couple of weeks here are finally starting to pay off. So Amazon looking very good. No red flags at all. Would not be surprised if we just recapture the daily uptrend and really start attacking our prior levels of the all-time highs. Now moving into Google. Google also looking pretty good on the day, 1.11%. Can't keep Google down for too long. They had the daily downtrend here going for about a week and a half, and now we've almost fully engulfed that move. So as soon as this move tops out, guys, two scenarios similar to Amazon, looking to reverse the daily uptrend. If we top out here, a lot of space above us at 171.19 to just set that daily higher low and get the daily uptrend back. Or the best case scenario, the complete V-shaped recovery, sit on this level as support, and then rise. Either of two situations, guys. I do believe the bulls are going to be able to grab this one. Gorgeous weekly uptrend, no secret there. Was just a little bit of weekly consolidation the past 2 weeks, looking to set the weekly higher lows and rise for the next leg higher. Google looking very, very strong. No red flags on any time frames at all. Moving into Meta right now. Meta also not looking too bad, about 3.79% to the upside. Finally pushing above our area of resistance, guys. And I was leaning into it, right? I've been saying that for the entire past 3 weeks. It pretty much had the same setup as SPY, except wasn't leading back on the all-time highs. SPY was really trying to come back into the all-time highs and get this weekly uptrend breakout. QQQ was trying to do largely the same thing. So when I see a company like Meta, right, holding near the highs of a move for 3 weeks in a row, nice bounce after earnings, tight, not giving back too much, and the market has a bullish lean, you're pretty sure that eventually the bulls are going to knock on this door and eventually After the third time, they actually let them through. So now looking very good, back above the moving averages as well, back above the 482 level of support. Now the trade setup is the following. When if Meta rather, pulls back into this area and uses the 482 as support, this is the breakout retest trade. I will be entering a swing trade here. The stop goes below this support level right here, 462, and we are targeting the all-time highs and beyond for the rest of the take profits. Very nice trade setup. So that's the one I'm going to be looking for personally. No red flags at all. As a matter of fact, we are on the verge, if the weekly candle closes like this on Friday, on the verge of resetting into a beautiful weekly uptrend. Looking very good on Meta. Congratulations to all the bulls out there. Now moving on to Microsoft. Microsoft also really launching, right? So the two trades we took on Meta and Microsoft yesterday were pretty much picture perfect. Don't want to jinx it right away, but so far looking very, very healthy. Microsoft bouncing, coming out of these range of consolidation, right? This whole 416 all the way down to about 400 range of consolidation. We are now back above it. So what are the bulls looking to do? They had the daily downtrend here by the bears, looking to put in a heck of a bounce and pretty much reset. This is another pretty much break above retest trade setup, guys. If we retest the 415, could be a juicy entry here. Stops go below the lows, and then we're targeting pretty much all-time high for TP1, and then TP2 should be around 450, the psychological number. So looking very, very juicy for that type of setup on Microsoft. Bulls are really looking to reverse this back into a daily uptrend. And why do I have such a bullish lean, guys? Well, because the weekly was always in their control, just looking for the weekly higher low for further trend continuation, and it really looks as if Microsoft is going to get it. So very juicy trade setup potentially in the near-term future. Now moving on to Netflix, give me another quick second. All right, Netflix not looking too bad at all here, guys, right? 2.95% to the upside, and the bulls did exactly one of the scenarios that we were talking about yesterday. I was saying that since Netflix was so strong on a weekly time frame, I would not be surprised even if we're coming to challenge these daily lows here in jeopardy of losing the daily uptrend to a daily downtrend. I would not be surprised if we use these whole levels right here. Prior resistance should now be support. Use it as support. And if QQQ or SPY has a plus 1% day to the upside, Netflix is going to explode. That's exactly what happened. So now Netflix is just looking we have a double bottom here, right? So no closes below this level. I would argue that this is a double bottom, no loss of the daily uptrend. So just a little bit of sideways consolidation. Going to be looking for Netflix to see if they can push beyond 662. If they get beyond 662, well, very simply, uptrend simply continues, and we then target the next area of resistance, 695 to 700. No red flags whatsoever, guys. If anything, if Netflix drops further into this green box, coming down maybe to, let's call it 620 to 610, healthy weekly higher low, that's where I'll be looking to make a potential swing trade on Netflix for the eventual weekly trend continuation. Moving on to NVIDIA right now. NVIDIA, guys, I mean, what is there to say, right? Just a gorgeous, glorious weekly uptrend. You can throw all the positive adjectives at it, right? It's just absolutely amazing. If we're coming into, are we coming into overbought conditions? Well, let's have a look, guys. Hourly, severely overbought, 85, right? 4 hour, getting a little bit overbought. We even have a slight bit of negative bearish divergence. So that is one thing to watch out for there. The daily as well, a little bit overbought, but you guys know, I mean, it's NVIDIA for crying out loud, right? This thing can stay overbought for a very long time. Sometimes it just does not care, right? So the better thing to do is watch for your lower time frame reversals. As soon as you see an hourly downtrend similar to the one that we had back here, that is when you know we are in for a little bit of daily consolidation. So any move down at this point, guys, going to be looking for a higher low, anything above 1071, daily higher low for further trend change. The next area that we're looking at, very simply, guys, prior resistance should be newfound support. So if NVIDIA continues up a little bit more and then the moving averages start catching up as we pull back into this area, expect this area to be acting as a first area of confluence. All in all though, guys, no red flags at all. This stock is so strong. Just be very cautious trying to short this thing without having confirmation from your lower time frames. It can take you on a very wild ride. It's the most traded stock in the entire market, guys, and it's a stock that Wall Street loves the most. So just know if you're trying to short this thing, you are pretty much counter trend trading the strongest stock in the entire market. Now moving on to Tesla. Tesla just doing a whole bunch of nothing, right? Still trapped. I mean, it's so trapped you can barely see the candle. So let me just blow it up a little bit more, move this a little bit over. You can see still trapped above our range of consolidation, right? So big range of consolidation on Tesla. No secret there. 173 pretty much your last line of defense. If we were to lose this, daily downtrend would be commenced by the bears, excuse me, and then we'd be really looking, guys, dangerously close to our lows, 165 to 168. Why are those so crucial? Because if we close a weekly candle below 168 down here, it would be a weekly downtrend on Tesla, which just means that we're in for even more monthly consolidation. Yes, even more, even after this nasty monthly downtrend has continued for a better part of a year at this point, right? So it's really make or break for Tesla right now, guys. Can we see a little bit of a stop hunt down here and maybe a candle close above? Yes, that's why I say candle closes below 168 only. And to the upside, guys, need to break 182.64 to really get a daily uptrend moving. I am so surprised that on a day where everything is up tremendously, Tesla is doing absolutely nothing. I mean, if they can't get it done on a day like today, it just goes to show you how nervous people are about building large positions in this stock. And retail trader sentiment, guys, on Twitter, on Reddit, is really, really, really low right now. It seems as though a lot of long-term Tesla bulls have pretty much thrown in the towel. So usually when you see that, usually it's the right time to buy a stock. However, guys, just keep in mind, Tesla's demand problems will not be solved overnight. Those really come back to their glory days only when interest rates start falling rapidly. Even though it's very bullish that Tesla has been offering 0.99% financing, Tesla is basically just absorbing the loss on financing because they know that down the line rates will come down. So they are bearing the burden of the financing. They're just trying to get cars out of the doors. That's why they're offering new customers 1% interest rates for financing Teslas. So we'll see in their next Q2 or quarterly earnings whether or not that's been helpful to the brand. So far, not so much price action. Moving on to Palantir now. Palantir not looking too bad at all here today. Finally, another day of upside for Palantir, right? So we were saying, guys, sideways consolidation for an extended period of time, coming down into a huge, huge bull zone, guys. Monthly support, monthly resistance, monthly support again in the context of a monthly uptrend, looking for the monthly higher low for the continuation of the trend. We have to be bidding these locations, guys. It's free money. Your long-term bulls are always in control, which is why I've been playing this stock so aggressively over the past 2 months, and it's been paying off very well. So daily uptrend has commenced, tackling our resistance band right now. Resistance is set put at about $23. If the bulls can really get us through here tomorrow, going to be looking very good to then sit on this $23 resistance. And that could be a nice little juicy trade as well. Breakout, retest of the range, and then run could be a very nice opportunity if ever you missed Palantir's little rally so far. But looking very good now, healthily above all the moving averages too, something we haven't really been above them consistently since all the way back in the month of March. So looking very good, tightened up, coiled up, and now we have that momentum explosion looking very good. And even on the weekly here, guys, right, it was very, very choppy for a long time. And now suffice it to say, the bulls do have the weekly uptrend back in their favor. So looking excessively good on Palantir. As I've said, the monthly really shows that the bulls want to attack this $28 level at a certain point this year. Am I saying it's going to come within the next 2 weeks? No, but probably, and I say this with maybe 80-85% confidence, $28 will most likely be tested by Palantir over the course of this year. Now, lastly, PayPal. PayPal also up about 0.32%. Not the best day for PayPal, but at least it's something, right? Got to start somewhere. So once again, bulls are trying to reset this into a daily uptrend. Create a lot of space off the lows here, 60.8. So any move lower, just going to be looking for that daily higher low for the daily trend change. That is step number one for the bulls. And then after that, we need to start reversing the weekly trend change as well, since now, as of the most recent last week close, we are unfortunately in a new weekly downtrend. So now the bulls have to do a heck of a job to reset this into a weekly uptrend once more. So this stock is pretty much going to take some time to really fulfill the reversal prophecy that everybody is looking for, right? Personally, myself, if we do get a little bit of a dip down here, maybe back into the high 62s, something like that, right? Retest these levels right here. I may be tempted to write some short puts, 60 or 59. But for now, my current play right now is Square. I just like this stock a little bit better right now. The growth prospects are better. And the company is not going through a 1-year transition period similar to what PayPal is going through right now, right? So PayPal still just kind of muted, right? Doing a whole lot of nothing. No clear trend direction as of yet. I still do maintain though, 60 down to 58 is the level that I'm more interested to bid in. So that's pretty much everything we had for you guys today in today's video. Hopefully you guys enjoyed it, and hopefully you guys made some profits today. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new here, guys. Thank you so much to all of you who have subscribed to the channel recently. We're closing fast on 1,700 and eventually 2,000 subscribers, guys. I'm so excited. We're going to be doing a lot of new content on the channel, and I do have a lot of new planned things for you guys. Just going to take a little bit of time to roll those out. So looking forward to many, many new and exciting things in the future for the channel. And thank you all for being a part of it. And now lastly, guys, if you have any questions whatsoever, stock, technical analysis, an options play, macro discussion, anything you want, leave it down below in the comments and I'll usually get back to you within the first 24 hours. And keep in mind, if you want me to look at a ticker, guys, we always do those on the Friday after the close. So I will do the tickers on the Friday session. We're going to spend probably 5-10 minutes doing as many subscriber requests as we can. Please only limit your request to 1 ticker per person, just to be fair to everybody. So take care, guys. I'll see you tomorrow after the close. Peace.